Now we're looking at the cash flow statement for 2015, and of course step one is always to find the difference between the cash in the bank from one year to the next. So looking at the balance sheet for 2013 and 2014, we see that there's 60,000 cash and 34,000 cash in 2014. We have a bank overdraft of 31,000 in 2013 and a bank overdraft of 18,000 in 2014. So 34,000 minus 18 gives me a net cash stroke bank of 16,000 in 2014 and 29,000 in 2013. And this tells us that there's a reduction of 13,000 in the net cash stroke bank. That's actually our answer. That's what we're working towards to reconcile where did that figure come from. So step two, then we look at fixed assets. Now this is quite complicated. So we put in our fixed assets opening balance plus purchases on fixed assets minus disposal gives me the closing balance. So we put in the opening balance of 470 and the closing balance is 640. Go down then and look at the notes, and note number 2 is that fixed assets which cost 50,000 and on which total depreciation was 25,000 was sold for 30,000. So we have 470,000 plus X minus 50,000 is equal to my closing balance of 640,000. So we go 470,000 minus the 50,000 minus 640,000 gives me a purchases of 220,000. We then look at the accumulated depreciation. We have an opening balance of 80,000 and a closing balance of 200,000. We were told in note 2 that the total depreciation on the disposed asset was 25,000. So the balancing figure here is our P&L charge. Where do we get the 145,000 from? 80,000 minus 25,000 minus 200,000 gives me 145,000. The profit and loss on disposal, the cost of the asset we dispose of is 50,000 minus the accumulation of 25,000. Both of those given to us in note 2, giving us a net book value of 25,000. We received 30,000 and we got a profit on disposal therefore of 5,000. We now have to do a summary of all of that work. Purchases of fixed asset 220,000. It's in brackets because it's money leaving the factory. The sale of fixed asset is 30,000. It's money coming into the factory. Depreciation for the year of 145,000 is depreciation is a non-cash cost. So we added back on to our operating profit. And profit on disposal is minus 5,000. It's a non-cash gain. So we take it off of our operating profit when we eventually want to find the net cash in and net cash out.